Ajay and Cequity for having me here. And good afternoon, ladies and gentlemen. Um, I think one of the most exciting things about being part of the retail bank currently is the size, speed, and magnitude of change that one's seeing. Um, as Paul Volcker once said, that the greatest invention within the retail bank, sort of invention stopped after the ATM in 1972. But I think the amount of change that we've seen over the last 3 years, and I do believe over the next 5 to 10 years, I think is going to be transformational. And so therefore, in that context, being the head of the retail bank is both scary at one level and exciting at the other level. And it's very interesting that the first question that was asked today was, how many of you have gone to a branch? And that's really the billion-dollar question that bankers are now currently addressing. How many branches do we need? A. B is, do we need branches? And therefore, what we find is that, yes, nobody comes to the branch, at least to do transactions, but the customer wants to see a branch close to his house, close to his office, close to his train station, because ultimately we're in the business of trust. So therefore, you may transact with us only on the ATM or only on the mobile or only on the internet. But the fact that the branch head is close to your house delivers that level of trust. And I think I do appreciate some of the stuff that both Nagesh and the first speaker spoke about how things are changing online, but also the physical touch is critical. And therefore, I think banks that are able to get both these together, the empathy for the consumer, the customer within the branches at one level, and being able to create a intuitive, differentiated, simple customer experience, customer journey online, and people are able to bring this together, I think really will be winners in the future. Because I think clearly we're shifting from an environment of commoditization into a much higher level of customization. And I think we are moving into an era where people want not services, but experiences. And I think great examples of, we've spoken about Uber this morning, we spoke about Amazon this morning. I think they've changed the shopping they provide. Yes, they provide a service. Uber takes you from place A to place B, but the focus is really on creating a differentiated experience that people continue to speak about even after all these years. Similarly, on mobile phones, yes, you had a mobile Nokia, but I think the paradigm completely shifted as soon as the Apple phone came in to be able to create not a service of talking to people or messaging people, but a differentiated experience on the phone. And it's really about, and I do believe that this shift from service to experience is going to hit banks as well. And I think we're already part of that paradigm. We've come a long way from the way that, and I think the question that was asked on how many of you have gone to a branch is the classic example of how the service has changed, is beginning to change into an experience, because banks are now able to serve you anytime, anywhere. Whether you're sitting here or you're sitting on your sofa on a Sunday evening, you want to transfer money, you can do that. You can do that today. And I think that is the big shift that is certainly playing out within the banking industry. And that, in a sense, is the coming together of mobile at one end. Everybody has a mobile. There is no such thing as offline. All of us are online all the time. Big data, and the other end of the spectrum, which is social media. I think the confluence of all these three is really what customer experience or customer journeys are about. And really, we've moved well and truly into the age of customer, because as the first speaker spoke about virality, the network impact, I think the banks, organizations which had distribution strength, in a sense become no longer relevant. Uber is in 150 or 200 odd cities across the world, but there are 20 guys who are running that out of San Francisco. And I think that really is an epitome of the change that's happening to business models. And so therefore, I do believe that we are well and truly in the age of the age of the customer. Let me take the first piece, which is mobile. And I think the evolution of the mobile, and particularly the smartphone, has fundamentally shifted the way that we are able to sort of deliver services to our customers. Like I said, the customer's need is to be able to do pretty much anything that he could do in a branch on the mobile phone. And so therefore, what has now become of our mobile application is that it is a digital manifestation of the branch. And therefore, anything that you can do in a branch, you're able to you're able to do on the mobile phone. So just to give you an example, you can open FDs, you can check your balances, you can pay credit cards, you can even now book a locker on the mobile phone. So you ask for a locker in a particular branch. If it's available, it's ready, and you can just pick up the keys, go to the branch and pick up the keys and use the locker. And that sort of, it also brings in a high level of transparency to the relationship that we have with our customers. And I think that, like I keep saying, we are ultimately in the business of trust. And because we're in the business of trust, the constant balancing that we are bringing to the table is operational risk or risk in general at one level, and customer convenience and that at the other end. And it's really because of technology that we're able to get such a fine balance, that we are able to take care of operational risk on one side and be able to create a differentiated customer experience, particularly through the mobile phone. So you can get instant personal loans, book lockers, FDs, RDs I spoke about. We're also using, we don't create technology. I mean, Apple does, they have biometric authentication. We find use cases to be able to make life simpler. And one of the pain points that customers often talk to us about is the number of PIN numbers that they need to remember. And so therefore, we've started using biometric authentication. So at least in as far as mobile transactions are concerned, you no longer need to remember need to remember a PIN number. You can just use your use your thumb to be able to authenticate. Wearables is the next big thing, I'm told, so therefore, the next time you're playing golf and you want to know how much is the balance in your account, you can just flick on your Apple Watch and be able to check the balance. So that's one use case that I'm told is very critical for people who play golf. And I think we've seen enough accolades around. I mean, I think whether it is from our 2.5 million customers who are using the mobile app, or external sources, I think the intuitiveness that we've brought to the mobile app is something that we're quite proud of. Social media. I think in the old days, people used to write. Actually, some people still do to me. Long letters about complaining about our services. People do that on our Facebook and Twitter now. So my Twitter timeline every morning will have at least 2 or 3 complaints about some customer experience that I have faced, either on an ATM or in a branch or whatever it is, and you're expected to solve for that instantly, which we do. We use social. We've got a strong presence across the entire social media. One, to hear our customers. What are they saying about us? What are they saying about our competition? What are they saying about our products? Are there queries that they have about our products and services? Is there any changes that we need to do as a result of this? And this feedback is coming to us instantly, and that's really the beauty of. I mean, I think at one level, this whole need of doing focus group discussions, etc., to me have become quite irrelevant, because you've got acres and acres of data that is available to you if you just look at your social media timelines effectively. So we've got a presence across Facebook, Twitter, Instagram, LinkedIn, and so on and so forth. And we use it both to hear what our customers are saying, as also to be able to engage with them through various offers and to tell them about what is happening within Axis Bank, and most importantly also to be able to solve queries and complaints quickly and effectively. So I think the old days of we will get back to you in 48 hours time. I think those days are over. I think if there is one thing that really pisses off customers is that one interaction which basically says we will come back to in 48 hours. So I think customers expect closure. It used to be in days. It's come down to hours, and we're now down to 30 minutes on most customer queries and complaints. I think data has been called the next dollar. Data has been called the new oil, and I think all of that is true. I think technology has changed so effectively, and I think I just want to put it in. Maybe I'm aging myself here. It used to be called electronic data processing in the 70s. It used to be called IT in the 1990s. It used to be called digital in 2010, and it's called big data now. But I think ultimately it's the same evolution that's playing out. The amount of data that computers are able to churn has gone up by an order of magnitude. The size of computers has reduced dramatically, but ultimately it's basically that electronic data processing, which is really what big data is all about today. There are a couple of great examples. Nike is actually selling data to third parties. Nike has got truckloads of data about what people are doing with their lives because of the variables that they're selling, and they're able to sell that data to third parties and to be able to monetize that data. And I think that's an interesting, everybody thought that Nike was basically a shoe manufacturer, but here it was monetizing the data it had through its variables. And the other great example of the use of data to be able to serve the customer better is the series called House of Cards on Netflix, which is about, I'm not sure how many of you have seen it, but spoiler alert here. It's about a senator who sort of goes on to become the president of the United States of America. No, it's not the story of Donald Trump, but I think it's far more interesting. And it's the entire sort of series has been built on the back of analysis of viewership. When do they pause? When do they break during a particular episode? How long do they take to go from one episode to the other? At what stage does the stickiness begin to build? In episode 5 is where stickiness to a particular series begins to build. And based on this, the storyline has been changed. And I think the success of House of Cards, it's got over 60 million viewers across the world, and they actually came up with an even sort of phenomenal idea where people were binge watching, which is basically they used to watch the entire 24 episodes all at one time. So people used to download episodes on a weekly basis, hold it all up, and spend the whole weekend watching a particular series. What Netflix did was that they downloaded the entire season on a particular night, and they continue to do so even in season 5, which is where we are today. And so therefore they've fundamentally changed the viewing behavior of people. And in that context, I think banks, if you look at it on the sort of the 2x2 matrix, in terms of the quality of data and in terms of ease or availability of that data, banks rank very high. We have literally millions and millions of transaction data that we do with you. We've got demographic data. We know where you are transacting with us, which channel you're transacting with us, what you're using your credit card for, which Chinese restaurant is your favorite, and all this data is now available to us. And so therefore, I do believe that banks are best placed both in terms of data collection as well as unlocking value to be able to serve customers better. And I think ultimately data is, one would argue, is available with everybody. But I think organizations that are able to convert that data into insights and insight into a differentiated customer experience are the organizations that will win. And I think that's really the journey that organizations across the world are currently going through. I don't think there's any shortage of data, but I think it's really this journey that one really needs to focus on to be able to really differentiate or be a winner in the long term. So if you look at access, I think retail bank is is in a sense the most amenable to data. So therefore, whether it is where do we put the next, we've opened 300 branches in the current year, notwithstanding the fact that none of you come to the branches, we will open another 400 branches next year. And we are actually using data analytics through our BIU, the business analytics team, to be able to pinpoint where we need to put those branches. We have a better understanding of at a micro market level where the affluence is, where the competition has its branches, where we typically do well, where we think growth will happen, and we're able to sort of now pinpoint where we want to sort of put our branches as we go forward. Budgeting for us is all done through data analytics. We are able to understand how the customer, so we can just say, oh, we want to go 20%, but we know that in this particular branch, balances in savings accounts, for example, are going to deplete because we know that customers who are 2 years old will typically deplete to a certain degree, and so on and so forth, and we adjust budgeting accordingly. On the lending side, our entire lending business on the retail side is built on the back of analytics scorecards. So therefore we use data in terms of customer behavior with us. We use external data, and we sort of overlay data that we get from bureaus and so on and so forth to be able to manage risk on our lending side. We use I think one of the things that's differentiated Axis is the empathetic sort of resources that we've had in our branches, and we are actually now adding another layer of being able to help our resources have a more intuitive conversation with our customers, wherein we are able to feed them with data in terms of propensity models. What is the next best product that this customer potentially can buy? Whether it is another fixed deposit or a mutual fund or an insurance or a new home loan or a credit card or whatever it is, we are able to, in a sense, predict or be able to help the resource pitch the most appropriate product to the consumer. And so therefore that conversation becomes more intuitive. And as bankers, I think fundamentally, what I always push my resources is that we need to know our customers, and knowing customers is more than just an Aadhaar number or a driver's license. You need to have conversations with customers on a regular basis, and if you don't have conversations with customers, we can help you know the customer better through data. So here are some sort of business cases that we've solved for through data. And I'm quite happy to share those with you. So here is a business problem that we were solving for. What happens to credit risk when a first and second customer with and without mortgages comes to us? So therefore, how do we treat these two customers, from a risk perspective? And what you will find is that a customer who's taking a second home but does not have a mortgage, the risk from a risk perspective, his behavior does not change as opposed to a customer who's buying a first house with a first loan. However, if he's buying a second house with a second loan, the size of the risk goes up exponentially. And so therefore, decisioning like this certainly helps us as we are selecting customers that we want to lend to. Interesting case on the loyalty side. We had a whole gamut of products that were available on our loyalty menu card, but we had a very large gamut of products that were available, which were relatively higher value. But what we found was that nobody was using those higher value, and most of the people were using the catalog for relatively lower value products. And so therefore, that was an insight for us to be able to do something about it. I mean, in a sense, one is to be able to encourage customers to use some of the higher value products, be able to work with Cequity to move consumers, especially our higher end consumers, to use the more higher value products, but also focus on improving the quality of the catalog at the mid range. This is a bit technical, but what this basically, how do I predict risk And so therefore, we have an application scorecard methodology there. And so therefore, if you bucket the consumer, if you in bucket one, the probability of delinquency is 40% and it comes off as you go into bucket 10. And what this is basically telling you is that if you just used the bureau data, you're covering risk up to 60%, but because of the AppSec that we're using here, we're able to cover risk up to 80%, meaning that only 20% of the consumers were the number of consumers that we were rejecting still continues to be 20%, but we were able to cover risk better, thanks to this. Consumer pricing, particularly, where there is flexibility, which is on home loans, we are able to, sort of price the consumer at the peak point where, where he continues to be a profitable, customer for us. Basically, the question that was being asked by the business was, how do we decide which consumer to give, sort of discounts, particularly when there are balance transfer issues and so on and so forth. Do we give it to the most profitable customers? Do we give it to the customer with the highest number of relationships? Or do we give a flat rate discount to everybody? So these are some of the questions that, sort of we were answering for. And, questions like this, we would have done it intuitively, sort of back of the envelope calculations, but now we have data available about consumers, and we're able to make decisioning like this much more effective. The conversation that we have with the consumer also becomes a lot more effective. And so therefore, I think there was some conversation around customer centricity. I mean, ultimately, in a business like ours, I think customer is king, and we're in an environment where the customer is king. Do we get it right every time? Probably not. But I think we do believe that banks in general, and sort of certainly Axis Bank, we do keep our eyes and ears open to what the customer is saying. And now there are so many avenues for the customer to engage with us. I think it'd be really foolish for us not to listen to consumers, to be able to sort of have that loop of listening to the consumer, changing processes or changing products, and then going back to the consumer, and having that sort of constant loop playing out in the organization. I think the adoption of technology, I think there is a choice that organizations make. Am I going to go down the innovation route? Am I going to use technology to serve the customer better, or am I going to say, like Barnes and Nobles, that I'm not going to do anything about it, or Kodak, who did nothing about it? Or do you adopt to innovation, adopt to technology, adopt to changing consumer needs, and if you want to stay relevant to the consumer, you have to be able to sort of change within the organization to rapidly changing technology on one side, and rapidly changing customer expectations on the other side, because otherwise in the long run, I think you become irrelevant to the consumer. Thank you.
Thank you, Mr. Anand. Questions? We have someone there, please.
Hi. I'll share some of the experiences which are a little expectation from the banking side. I think that dropping checks should be done away, because it's too much of time consuming. I have to go to branch, drop check, it goes for clearing and all those RBI and other things. So can you share some thoughts on that? That when do we start doing this scan images and faster clearance happens?
So while I was waiting for my turn to speak, I remembered that I needed to make a payment to somebody who had provided a service to me. So I put on my mobile phone, Axis Bank app. I created this person as a beneficiary. He had a account with Union Bank in Kalba Devi. So therefore, I have his account number, I have his IFSC code. I create him as a beneficiary, and I transferred money. It was instant. I didn't have to go anywhere. So I mean, I'm quite happy to show you the capabilities of the mobile app. I've stopped using checks for the last few years. So therefore, obviously in the business environment where there is a maker checker, etc., I think that process is still slow. But what we're certainly seeing within the peer-to-peer payment space, there is an increasing use either of internet banking on one side or mobile banking on the other. And I think it's super simple.
No, that's correct, but still the check leaves are still the current business and the way it's happening. So when do you see the scan image of the check getting accepted? That's what I'm saying.
That's coming very soon.
Yeah.
It's coming very soon.
So continuing your example, I faced one of the problem that credit card payment in a hurry like you, I transferred money to my second card, and end of the month I received one statement from the bank that you have not paid for the other card, though the money was there already for the other card, because bank keeps telling you, you need to upgraded, you get titanium now. So by mistake I paid for the previous card. So why doesn't bank stop me? Boss, you don't have spent. Why are you paying there? And next month you are getting a surprise shock that, boss, you have to pay this 500 or 1,000 rupees for late payment charges. So
It's an interesting use case.
Okay, coming to the third scenario. The bank, SEBI allows to make USBA application for 5 accounts, but your banks are still restricting one USBA application per account. So when do we see that kind of regulatory change and the customer needs to be getting met from the simple same application that you are extended for the more 5 applications?
I'm not sure about this regulation, but if SEBI says that 5 accounts can be hooked to one account, I see no reason why that should not happen. We'll certainly work on that.
Yeah, the next case is savings bank. Like I want banks to be a bit intelligent. That, boss, you are sitting on 3 million balances. Why are you putting money in savings bank account? Why don't you shift to mutual fund, liquid fund, which will give you 2% more return?
Who's your bank?
Sir, one of them is Axis also.
No, so I think it's the job of the relationship manager to ensure, sort of based on your cash flows, etc., to ensure that there is some liquidity lying around with you. Use the rest to, sort of invest in liquid funds, mutual funds, insurance, etc. So if the relationship manager is not doing that, then he's not doing his job.
I got answer that you need to have the wealth card instead of the burgundy card.
No, there's no such thing.
Anyway, the last one to share with you. See, I understand that everything is centering around your services, your revenue enhancement. But there is no way by which you are telling that customer, you have been charged. Why don't you put it on net also that these are the credit reversals sought by you? Many times it happens, for no reasons of the customer's fault. But there is no way where bank sites permits that whatever your grievances for the reversal can be easily put on that kind of a momentum, which you also can analyze, which also can help. That yes, whereas the banking system of charging customer is going wrong. See, maybe that's the thought you can ponder over.
So I just want to, like other businesses, banking is also in the business of creating value and rewarding shareholders and so on and so forth. So return on equity is a key matrix that we certainly look at, and so therefore there will be charges. There are costs that we bear, and so therefore the customers need to pay. I mean, remember that even when you buy a movie ticket on on PVR online, you're paying a convenience fee of 25 rupees. That nobody complains about. So therefore, I think there are charges. So therefore, if the question that you're asking is that is there transparency as far as the charges is concerned, I think in most cases we give a breakup of what charges are being charged to the customer. If there are still charges that you think are sort of opaque, etc., I'm happy to look at that. In general, we can have a conversation offline.
Yeah, just one more question.
Yeah, if we can have the question from you, please.
Yeah, one last question. Probably,
Sure,
because
please.
too many questions to the banks. Not your fault. Maybe banks are at the receiving end now. But I want to ask something relevant to what we are discussing. You are planning for technology, and one of the technologies available to banks is about digital wallets. Now, I find that none of the banks in India are really able to utilize this technology, and I don't know why. Because an analogy is with that of credit cards. I mean, why credit cards were successful is because there was Visa, there was a MasterCard. Any bank came up, it was linked. None of the wallets are linked. I mean, I have 15 wallets in my mobile, and still I can't deal with my cab fellow. So why not banks come up with something, tie up with RuPay or PayPal, or all cards, wallets can be linked up. And
I
for
think
the
you,
benefit of
you,
consumers.
I think you answered your question. I think the answer lies in the question itself. As soon as you have a bank account, a savings account, for example, banks already provide you with multiple avenues to pay. Whether it is a debit card, credit card, net banking, you can go to an ATM and withdraw money. You can transfer, you can pay on, Book My Show or whatever it is. And so therefore, the question I have for you is that what is the use case that you have, why do you need a wallet when you can use any of these payment instruments for you to be able to pay? So even on Uber, for example, you can either pay through a wallet or you can pay through a debit or credit card. And so therefore, if you think of it at one level, the savings account itself is a wallet where the banks have been able to provide you multiple payment instruments. And they're all interoperable, which means that you don't have to worry on where whose POS terminal is being used. So if you have an Axis Bank card and it's a State Bank POS terminal, you don't have to worry about it as a consumer. And so therefore, the entire payment ecosystem that's got built around the savings account is all interoperable. So whether you want to transfer money online between one bank and the other, you can do it. On IMPS, you can transfer money peer-to-peer in any bank in 56 odd banks across the country. And so therefore, my question is, why do you need a digital wallet? I don't think credit cards are going away anytime. I think the convenience that the credit card brings, I think is very difficult to replicate. Yeah.
Hi, I'm Tanya and I'm from HSBC. So I have seen that because of the trend towards digital space, we've also seen a move towards financial disintermediation, whether it's at the individual level with things like Paytm and e-wallets coming up, or whether it's crowdfunding for startups. So within this scenario, the banking industry is sort of forcing itself to adapt to the ecosystem rather than proactively driving change. So how is it that we can ensure that we stay at the top of things rather than being forced to adapt to the environment?
So that's the second question on wallets. So I just want to put this in context. On a monthly basis, we see 200,000 crores worth of transactions on the ATM. We see about 12,000 odd crores transactions on credit cards, 18,000 crores transactions on debit cards, and the total transactions that we've seen in wallets over the last 1 year, I think, is less than 2,000 crores. So therefore, yes, consumers are certainly using the wallets for lower value transactions. But I think fundamentally, the ecosystem as it currently exists is what is being utilized. Having said all that, I think there are various parts of the banking system, whether it is peer-to-peer lending or within the payment space, that we are seeing disruptions from startups who are trying to solve for a particular problem. So therefore, when you use a credit card online, drop-off rates are very high, and people are solving for that. And I think that is certainly something that will benefit consumers as we go forward. And therefore, as banks, while there may be some cases where it looks like we are being reactive, we also work, for example, in Axis Bank, on a monthly basis, we meet about 20 to 25 startups to be able to, if there is somebody else who's doing work and is able to come up with innovative solutions, we are happy to partner with them. And as long as, through that partnership, we are able to, serve our consumers. And I think there was some conversation around mindsets, etc. And so therefore, if you believe that, these startups are going to, eat away at your business, and, you're going to try and protect it as far as possible by providing a less than good customer experience, I think you're doomed. I think organizations, and particularly banks, who are able to participate in a collaborative manner with the change and disruption that is happening, or change and innovation that's happening, I think will certainly succeed. And I think at Axis, we certainly work with a lot of startups to be able to, so see how we can do business better.
Okay, thank you.